17 million units in under 9 months. Nintendo Switch 2 is officially the fastest-selling console in history. But here's the number nobody is talking about. Krafton, the Korean publisher behind PUBG, just appointed a chief AI officer and is spending $90 million to automate its entire company by the end of 2026. Welcome to Asia Tech Macro. I'm Alex.
And I'm Maya. Today we're looking at Asia's gaming and entertainment tech sector, because two very different visions of where this industry is going are colliding right now in real time. And I have to say, I was reading the Krafton CAIO announcement just this week, and my first reaction was, wait, is this a game company or a robotics startup?
That's exactly the right question. Let's start with the hard numbers. Nintendo's Switch 2, launched June 5, 2025, sold 3.5 million units in the first 4 days, twice the original Switch's global launch, and by December 31st had crossed 17 million units worldwide. Bloomberg reported Nintendo asked suppliers to produce up to 25 million units by end of fiscal March 2026. In Asia specifically, Switch 2 dominated January 2026 hardware sales with 365,000 units, outselling PS5's 225,000 in the region. Mario Kart World alone has moved 14 million copies.
And the financial results are equally striking. Nintendo's operating profits surged to 3 trillion yen, up 21% year-on-year. Dedicated platform sales more than doubled to 1.9 trillion yen. Digital sales now represent 50% of software revenue. Market screener analyst Joshua Cooper noted in the February 25th report that Nintendo trades at a forward PE of 21.4x, well below its 3-year average of 28.9x, despite record operational momentum. That's a valuation gap worth paying attention to.
Now flip to Korea. South Korea is the world's 4th largest gaming market, with 29.5 million gamers spending over $450 per capita annually, roughly 3 times the Asia-Pacific average. Gaming IP exports hit $5.13 billion in 2024, exceeding the combined exports of Korean music, film, and TV combined. But the headline story of early 2026 isn't revenue, it's transformation. Krafton declared itself an AI-first company in October 2025, invested $70 million in a GPU supercluster, appointed Kang-wook Lee as chief AI officer last week, and plans to launch PUBG Ally, an AI co-playable character built on NVIDIA's ACE platform in the first half of 2026. Nexon CEO stated publicly that every game company should now assume it is an AI company. Square Enix wants 70% of its QA work handled by generative AI by 2027.
Two massive stories happening simultaneously. In Part 2, we dig into what they actually mean for each other and why the intersection is more complicated than it looks. Stay with us.
Okay, segment 2. Let's get into the tension beneath these two stories. Because on the surface, they look separate, Nintendo doing hardware, Korea doing AI. But they're actually competing for the same thing, the future definition of what a game even is.
Right, and I think the core tension is this. Nintendo's entire philosophy is that hardware and software are inseparable. The Switch 2 is not just a device, it's a carefully controlled ecosystem where Nintendo dictates the experience end-to-end. Joy-Con 2 mouse functionality, game chat, the new C button for AI-assisted content sharing, these are Nintendo innovations that only exist because they own the full stack. That philosophy has worked spectacularly, but it's also inherently closed.
And the Korean model is the opposite. Krafton, Nexon, Pearl Abyss, these companies are building AI infrastructure that is explicitly designed to be platform agnostic. PUBG Ally runs on any device that supports NVIDIA ACE. The bet is that AI-native gameplay, adaptive enemies, personalized narratives, co-playable AI characters becomes the dominant user experience regardless of what hardware it runs on. If that bet is correct, the hardware premium that Nintendo charges starts to erode.
Okay, devil's advocate though. Nintendo has been written off by the AI-first narrative before. Remember when mobile gaming was going to kill dedicated consoles? When cloud streaming was going to make hardware irrelevant? Nintendo keeps surviving those predictions because its first-party IP, Mario, Zelda, Pokemon, creates an emotional lock-in that no AI character can replicate. PUBG Ally is impressive, but it's not Mario.
That's the strongest bull case for Nintendo, and I don't dismiss it. But here's what's changed: the cost of content creation. Krafton disclosed that AI tools have already cut game development costs by approximately 30% in its internal projects. Square Enix confirmed similar efficiency gains in its February 2026 earnings presentation. If AI compresses the cost of producing high-quality game content by 30 to 50%, the competitive moat of having expensive first-party studios narrows. Nintendo's advantage has always been quality plus exclusivity. AI democratizes quality. It can't democratize exclusivity, but it can make exclusivity less valuable if the overall content supply explodes.
And that brings us to segment 3, the ripple effects. Because this AI transformation in gaming has implications that go well beyond Nintendo and Krafton. The biggest downstream impact is on the traditional gaming workforce.
The numbers here are sobering. The global games industry shed approximately 10,500 jobs in 2024, according to Game Developer Reporting, and 2025 continued that trend with major cuts at Nexon America, Square Enix's Western Studios, and several mid-tier Korean developers. The pattern is consistent. Companies are reducing headcount in QA, localization, and junior art roles, exactly the categories where generative AI is most effective, while simultaneously increasing hiring in AI engineering and live service operations.
And the geographic dimension matters here. Korea's gaming industry directly employs around 90,000 people, with another 200,000 in adjacent services. If AI automation eliminates even 20% of those roles over 5 years, that's a significant labor market shock in an industry that South Korea has designated as a strategic national export sector. The Korean government's Ministry of Culture announced in January 2026 a $200 million fund specifically to support gaming companies navigating AI transition, which is an acknowledgement that the disruption is real and arriving fast.
The China angle is also worth flagging. Tencent and NetEase, the two largest gaming companies in the world by revenue, have been quietly integrating generative AI into their development pipelines for 18 months. Tencent's internal AI tools reported reduced the development cycle of its latest mobile title by 4 months. In a market where Chinese mobile gaming revenue is recovering after 3 years of regulatory suppression, up 12% in 2025 according to the China Audio, Video, and Digital Publishing Association, that efficiency advantage compounds quickly. And in part 3, I want to challenge the assumption that Nintendo's hardware model survives the next platform transition intact. Don't go anywhere. All right, contrarian corner. And my uncomfortable view today is this. Nintendo is not a hardware company. It never was. And the market's obsession with Switch 2 unit sales is measuring the wrong thing entirely.
Okay, that's a bold reframe for a company that just sold 17 million consoles in 9 months.
Stay with me. Here's the core argument. Nintendo's actual moat is not silicon. It's mythology. Mario, Zelda, Pokemon, Donkey Kong, these are not game characters. They are cultural infrastructure. They are the Disney IP of interactive entertainment. And here's the contrarian implication. If that's true, then Nintendo's long-term value is actually being systematically underpriced by investors who are modeling it as a hardware cycle business. Every console generation, analysts debate whether Nintendo can hit its unit targets. Every generation, they miss the bigger point. The hardware is just the current distribution mechanism for the mythology, and distribution mechanisms change. Mythology doesn't.
So you're saying the Switch 2 success is almost a distraction from the more important question of whether Nintendo is monetizing its IP across enough distribution channels?
Exactly. Look at the data. Nintendo's theme park revenue, Super Nintendo World locations in Japan, Hollywood, and Singapore, generated over 200 billion yen in fiscal 2025. Nintendo's film and TV licensing pipeline, post the Super Mario Bros. Movie, which grossed $1.4 billion, now includes a Zelda live-action film confirmed for 2027. Merchandise revenue is at record levels. These are not hardware cycle businesses. These are compounding IP royalty streams that grow regardless of whether the next console hits its sales targets. And yet, Nintendo still trades primarily on console unit forecasts. That's a mispricing.
That's actually a really interesting lens. You're saying Nintendo should be valued more like Disney or Universal than like Sony or Microsoft.
Precisely. And the Korean companies face the mirror image of this problem. Krafton has genuinely valuable IP in PUBG, 75 million monthly active users globally as of January 2026, but it's pouring $90 million into AI infrastructure and calling itself an AI company. That's a bold identity pivot for a company's entire revenue base depends on one franchise. If PUBG Ally works and transforms the live service model, the upside is enormous. If it alienates the existing player base, which is notoriously resistant to changes in game feel, Krafton has spent $90 million weakening its core asset.
So the bear case for Korean gaming AI is they're spending heavily to transform products that are already working, with significant execution risk in a player community that may not want what they're building.
Right. Innovation risk compounded by franchise risk. And here's my question for our listeners, because I think it crystallizes the entire investment decision in this space. When you look at Asia's gaming sector right now, you're essentially choosing between two theories of value creation. Theory 1, Hardware and ecosystem control compounds over time, and Nintendo's closed platform gets more valuable as its IP library deepens. Theory 2, AI native gameplay becomes the dominant experience, platform walls erode, and the companies that build the best AI infrastructure win regardless of legacy IP. Those two theories lead to completely different portfolio allocations, and right now, the market hasn't fully committed to either, which means there's genuine alpha available for investors who pick a side and are right. Part 4 has our answer. Stay with us. All right, action items. 3 concrete things to do with everything we've discussed today.
Number 1. Treat Nintendo as an IP royalty business, not a hardware cycle stock. The Switch 2 numbers are impressive, but the more durable investment thesis is the mythology monetization story. Theme parks, film licensing, merchandise, and the inevitable move toward broader digital distribution. At a forward PE of 21.4x against a 3-year average of 28.9x, the current entry point reflects console cycle anxiety rather than IP compounding value. If you're underweight Nintendo because you're worried about the next hardware transition, you may be solving the wrong problem. The question isn't whether Switch 3 sells well, it's whether Mario and Zelda remain cultural infrastructure for the next generation of consumers. The evidence overwhelmingly says yes.
Number 2, be selective about Korean gaming AI exposure. Back the IP, not the infrastructure spend. Krafton's $90 million AI investment is real, and the PUBG ally concept is genuinely innovative. But the history of gaming companies that pivot hard into technology infrastructure is not encouraging. The better risk-adjusted play is companies where AI is enhancing an already profitable live service business rather than attempting to transform a flagging one. Nexon's Dungeon Fighter Online, 850 million registered users globally, consistently profitable for 17 years, is integrating AI into content updates and localization in ways that expand margins without betting the franchise. That's the model to look for. AI as efficiency multiplier, not AI as identity replacement.
Number 3. Watch Tencent's China mobile gaming recovery as a leading indicator for the entire sector. China's mobile gaming revenue grew 12% in 2025 after 3 years of regulatory suppression. If that recovery continues into 2026, and early data from the Lunar New Year gaming period suggest it is, Tencent's gaming segment, which represents approximately 30% of total revenue, becomes a meaningful earnings catalyst that consensus still underweights. Tencent trades at a significant discount to global peers on a gaming revenue multiple basis. A sustained China gaming recovery closes that gap. Track the monthly active user data from NetEase and Tencent's mobile titles as your real-time signal.
The takeaway for today: Asia's gaming sector in 2026 is running 2 parallel experiments simultaneously. Nintendo is proving that great hardware plus irreplaceable IP plus disciplined ecosystem management still compounds beautifully in the short run. Korea and China are betting that AI native gameplay is the next platform shift, and the companies that build that infrastructure earliest will dominate the decade. Both experiments could succeed, in different timeframes and for different investors. The mistake is treating this as a zero-sum choice, when the smarter move is understanding which thesis matches your own investment horizon.
And the meta lesson: in entertainment, the content that makes people feel something always wins. The question is just which technology delivers that feeling most efficiently in each era.
Next time on Asia Tech Macro, we're going back to the geopolitical era. Specifically, we're looking at Taiwan's 2026 economic position, record semiconductor export revenues, a currency under pressure, and a defense spending ramp that's reshaping its fiscal outlook. How does the world's most geopolitically exposed tech economy manage that trifecta? That's next.
That one is going to be intense. Looking forward to it.
Stay data-driven. Bye.